Hi everyone, it's Grant Abbott speaking from Lightyear Docs and Abbott-Family, and I've got Michael Jeff Fries with us, who's our company's, shall I call you a savant or a guru?
I think guru is probably.
Yeah, probably, because usually if you see a savant, usually it's like an idiot savant, so we don't want that stuff. So
I don't want to be tarnished with that.
Okay, so you've probably seen this slide before, but essentially, Lightyear Docs is not about documents at all. In fact, none of our documents are stock standard. They've all got solutions built into them, which means that as time goes on, we have more and more solutions that are packed into single documents and certainly single solutions. This one we're looking at, obviously, our suite of companies. You'll find that most online or shelf company providers have a stock standard set of resolutions, which are really pretty boring in the long run. So again, ours are completely different to anyone else's, and I think that's important. When we have a look at, I've lost something there. So, but when we have a look, it looks as though I've lost a thing from ASIC there. But essentially, there's around about 2.6 million companies in Australia. A lot of them are trustee companies. A lot of them are bucket companies. A lot of them are trading companies. So we've got a whole mix and mishmash of all of these. But I see it time and time again that the same company is being used for a discretionary trust. And when I mean the same company, the same constitution for a discretionary trust, as is used for an SMSF, as is used for a trading company, as is used for a bucket company. And really, there's a lot of inherent weaknesses in there. For example, what happens if someone dies, the shareholder or the sole director? We've talked about that successor director solution. And look, I just came up, obviously, there's a huge difference between a push bike from a mountain bike and a racing bike. They all have their own purposes. And when you start to bifurcate and start to build into those little areas to build, for example, a discretionary trust company, which is really to ensure that payments or distributions only go from bloodline. When you have a look at how succession happens there, all of those are real hard issues to look at in terms of the underlying. They're hard issues to look at. So I'm just changing my light. They're hard issues to consider in the long run when we are just using a standard company. So each one has its own specific purpose. And certainly the SMSF trustee company that I've written for, I think, since the 2006, always had the ability that the executor was to be automatically appointed as a director of that company. And when it came around to paying out death benefits for a deceased, it was only that executor, which we call the replacement director, because obviously they're replacing the deceased, is the only person who can make decisions in relation to the distribution of those benefits. So it's not a big thing, but it is a very, very strategic thing, because if there's no automatic appointment, when we have a look at cases like Katz and Grossman, where it was the daughter against the son who was outside. He was the executor, but effectively had no say in the case. The same in Donovan and Donovan, where we had the daughter from the first marriage and the wife, the second marriage, or the spouse from the second marriage. Again, she didn't allow the daughter in. So effectively, although the daughter was the executor, there was no power there. So these are important little strategies we have. But again, there's a whole lot of stuff there. So what I'll do is I'll just hand over to you, Mick, and you can, I'll make you the host.
No problem. Will you keep doing the slides, or?
You'll be able to do the slides.
Yeah. Okay.
So just share the screen. And
No
I'll share now.
Excellent. Thanks, Grant. So as Grant was mentioning, and the topic today is Lightyear Docs companies. We believe our stands apart from any others in the marketplace, especially our trustee and special purpose companies in relation to what is included in the constitution and around the shares and around the controlling aspects. We also have obviously our leading member suite, including our special purpose trustee companies, which ensure we've got succession and bloodline protection. I won't go into this verbatim, but effectively, this is what the Corporations Act of 2001 defines what a company is. Basically, a company is a separate legal entity. So it's like its own, often describe it as its own living, breathing entity, although it's not breathing. It sits separate to what would normally be a person running a business or a group of people running a business, and it behaves and acts in its own manner. Obviously, there's office holders, directors who manage that entity, but for all intents and purposes, it's its own separate legal entity. Now, the name of the company determines what its legal status is. So we've got proprietary companies, which will normally have Pty Ltd or proprietary limited, and limited companies, which would have a limited afterwards. Now, just breaking up, just put a bit of a table there or a diagram to show the different types of companies. There are other company types that are available. These are the main ones. The most popular of those being the small proprietary company, which has less than 50 non-employee shareholders and is limited by shares. What does limited by shares mean? It just means that it's limited by the shareholding of the company. So if I've issued or capitalized it for one share being $1, then the liability is limited to that, assuming that the company is not trading insolvently. The large proprietary company is where that has to meet two of the following: has revenue of greater than 10 million, assets greater than 5 million, or greater than 50 employees. And in this case, then, if that is the position, you have to lodge accounts with ASIC. There are some exemptions you can get in relation to lodging accounts with ASIC, but it is important, and the reason I've got it on there is that you always check your clients in relation to whether they may push over from that small to large proprietary company. I know I've been in CFO roles in private entities where that has been the case, and where we've had to also look at getting audited accounts lodged with ASIC. So it's important that you often review and check that if there are clients that you think may be coming up to those areas, to actually jump in and ensure that you meet the requirements. The other types of companies are unlisted, listed. I've listed a couple of companies myself or been involved, I should say, in listing a couple of companies on the ASX. So that's your IPO. Unlisted is where you've got, you may have not-for-profit companies as well, such as the recent SAPEPA organisation that we've set up, Grant, and which we did a webinar on yesterday, and it's quite successful, and I'm looking forward to being a part of that and the growth of that.
Where would be, from your experience, just going back, because I know you've done a couple just recently, employee share schemes, where do they fit in the whole gamut of the companies?
Yeah, well, there's a few different ones. So a simple employee share plan can use a simple constitution, but we have a constitution that we're delivering to a few Lightyear members at the moment, and we will be doing a few webinars going forward in relation to that. But it has a few different share classes. So that's the simplistic employee share plan, where you may provide shares to employees that may be, for example, dividend only paying shares with no capital or anything on wind up. Then you have the more complex, where you'll have an employee share trust sitting outside of that, I guess, that operating entity, whether it's a company or a trust, that, and then there'll be an employee share trust that the company or trust will provide a contribution into, and provide employee benefits via shares or ownership back into the business. So some of the advantages of the company, I won't read this out, like the detail of this, but effectively legal identity, which I said before, so it's its own separate legal identity, limited liability. I've got the caveat there, unless they're trading insolvently. So if the directors believe they're trading insolvently, they need to take action in relation to that. And
just while we're on there, Mick, sorry to butt in.
Right.
Obviously, we're going into some pretty interesting times, and I think you and Rod from Optimum Ventum were telling me that there's been hardly any bankruptcy or liquidations to date. But obviously we're expecting, it's been pretty flat line in 2020, which is virtually unheard of.
The whole industry has been extremely slow in not only pre-insolvency but in insolvency, and a number of I know a number of players in the market have had to let go of staff. They've had to look at obviously they've got large office spaces and stuff, but I know that they are now in the process of rehiring and manning up because of what they believe is ahead of us.
Yeah.
And certainly from Eventum Optimum perspective, we're starting to see a good flow of work building up again already. I mean, we've signed up 3 more clients this week that we're working with, and there's a lot in the pipeline.
And can you just give us an update on where we are with the insolvency, because there was that obviously the drop
safe harbor
down and gave you a bit of relief. So where are we at to date with that, just so everyone has a good idea for their clients?
So that was originally to end in September. It's been extended out to December. So the safe harbor provisions allow you to put effectively a plan in place that has to be reviewed and managed on a monthly basis. We do that for a number of clients at present. It allows where there appears to be an insolvent event incurring, for them to put a plan to trade out of that without any risk or exposure to directors.
Perfect.
So perpetual succession, we often talk about succession. Grant's going to talk about successor directors a little later on, but the company allows effectively that perpetual succession, allows for changeover on death or other events. Also, the advantage is transfer of ownership and control. Obviously, if you want to sell, you can transfer the shares. Often people sell their business and don't transfer the shares, but it also provides that ability to offer ownership to employees, which Grant was touching on before in terms of employee share and those ESOPs.
And I think from certainly if I have a look at it from an SMSF perspective, which we'll look at later, an SMSF is a trust, but the rule against perpetuities doesn't apply, and that's built into the SIS regulations, so that it's important that one of the key criteria that all your assets are in the name of the trustee. And so if you've got 1, 2 or 3 members and people come and go, then it's just paying, changing the assets. That's why it's great to have a company that runs alongside. So we've got the SMSF company running alongside the SMSF, which are both perpetual. Interestingly, also that in terms of trusts, if you set up your jurisdiction for your trust in Adelaide, I'm not sure about switching jurisdictions, I'm still looking at that, but if you set the jurisdiction up in Adelaide, that's the first port of call to find out which state relates to it. And the Trustee Act in South Australia has no rule against perpetuity. So again, another reason where a company is a great trustee for that sort of vehicle.
Yeah, we can certainly change jurisdiction for the trustee company. I've just recently gone through the process with a Lightyear member in which we had to change from one state to the other. There is a little bit involved, and it's a bit of a process. You have to you actually have to write to the AG of the current state and receive approval to change the state, the registration. That takes some time. And then there's a form that needs to be lodged. A special resolution has to happen to the company, and the form has to be lodged with ASIC, and a fee paid. I think the fee is the same as the registration fee. Actually, it's about $506. So this just shows you the current suite of Lightyear Docs companies. We've got some employee share ones coming out. There's a few other things that Grant and I are both working on. But your standard companies, your standard bread and butter company for trading businesses. You can use it for as a trustee for your standard discretionary trust as well. We have the leading member discretionary trustee company for our leading member discretionary trust. SMSF special purpose company, leading member SMSF special purpose company, and they're obviously both trustees. It's interesting what you just said, Grant, in terms of the perpetual succession of having a corporate trustee. In the Eventum Optimum space, we certainly do still see a large number of trusts and SMSF trust SMSFs coming through of individual trustees, which, as you're aware, causes somewhat of a headache when you're trying to protect assets. because the individual trustee becomes personally liable. And often I still shake my head. We go back to some advisors and even clients who say that they did it to save money at the start, and
it just doesn't make sense. And I've seen also, in fact, dealing with one of our friends that, in terms of the right trustee company, how there's so many SMSFs that have been set up just with an ordinary company. Which means that effectively you're not able to take advantage of the annual $54 return payment. And there's obviously there's a couple of special issues around that, which I'm sure you're going to cover a little bit later on.
And you can actually get the 10-year reduced fee as well if you're.
Yeah, I know. I can't believe it, because I just got hit with like a $500-600 fine for my SMSF trustee company because I late lodged, which is. It's just ridiculous, because, I should have just paid 10 years. And I think it's $350 or something, which is crazy.
Yeah, it is crazy. So in addition to that, we've also got all the upgrades. So we upgrade to our standard company. So you get the Lightyear Docs constitution with the Lightyear Docs share classes. We've got a company constitution variation, which is just an upgrade to the Lightyear Docs leading member discretionary trustee company, the upgrade to the SMSF special purpose, and the upgrade to the Lightyear Docs leading member SMSF special purpose company. We've also got, which Grant will talk about soon, the successor director solution, which provides a single company plus upgrade. So these are the list. I put a little note there. So remember these prices to the left of the PAYG prices. If you are a PAYG, or you're a member, if you're a member and you're getting these as unlimited docs per month, if you upgrade 100 of your client's company constitutions, provide the client with a better solution, but not only, you would add almost $40,000 to your bottom line if you were charging, say, $395 per upgrade. I have seen others charge $550 to $1,000 per upgrade. So, but I like to work on $395 if you're effectively getting an unlimited document package for $595 or $795 per month. It's a great little revenue earn, isn't it, Grant?
Yeah, definitely. And I think one of the ones that I've done a bit of work. You and I have done work on these non-foreign or the foreign person trusts, and it's sort of coming smack in our face now that the 31st of December for New South Wales anyway. And look, really, Queensland and Victoria need to be going down that track as well, is upgrading a trustee to ensure that there's no foreign person who can be beneficiary, and that the effectively the variation or the amendment clause is irrevocable and can't let in a foreign person. But if you haven't got, and there's something like 800,000 trusts, I think, in New South Wales that potentially impacted if they've got property in them, they must lodge by online with the Office of OSR by 31st December at midnight. Otherwise, you'll be up for a land tax bill of 2%. And essentially, it's sort of gone under the radar. But again, for your clients, if you've got bulk upgrades, we can help you at I Love Accounting or Abbott-Family or Lightyear Docs if you need to do bulk. But again, it's not a bad idea. All this upgrade process is to start to get a really good foundation for your clients and not expect surprises. Next year, it's going to be a shock for so many people when they suddenly get a 2% additional surcharge on land tax. And it just might be that everyone still is an Australian beneficiary, but if it's an open-ended beneficiary clause, then it's deemed to potentially have a prospective foreign beneficiary. So therefore, you're up for that extra land tax, which will be a huge shock for everyone.
Yeah, definitely. I mean, we've already started helping a number of members. We've even been helping a number of non-members who are looking at becoming members, which is fantastic, of Lightyear Docs, that on bulk upgrades, particularly where they have concern on actually deciphering the trust deed and what clauses relate to allowing them to amend the deed or put a variation in. So if there is any concern, obviously reach out to Grant or myself. We're happy to assist. So Grant was talking about the SMSF trustee companies and trustee companies in general. So I'm just going to go through the next couple of slides are just observation points. Some of the areas where I believe I'm seeing some errors come through in relation to company setups. that may be my interpretation, and I'm happy. We're a community that we like to share ideas, and I'm happy to take on board anyone else's opinion on a number of matters as well. But this is not an opinion. This is actually regulation that SMSF trustee companies cannot pay dividends. So the corporation's regulation of 2003 had a clause in it that states the constitution of the company for an SMSF trustee company prohibits the distribution of the company's income or property to its members. The Lightyear SMSF trustee and leading member SMSF trustee, and we have a number of questions on this quite often, don't we, Grant? Why do you have a share? The only share class available is non, and it's because in our trustee, SMS trustee, and our leading member, we have non-dividend shares only available.
Exactly. I think that's really important. So when you do go through, or your staff go through and set it up, that non is just to emphasise that it's a non-dividend share only. So it's still an ordinary class share, but effectively they can't be paid any dividends, which is absolutely crucial.
I also, which I've said on the next thing in relation to, obviously our leading member trustee company has non, but I also use that for my other, which are non-leading member, my other trustee companies, because this is an asset protection and I guess risk mechanism. If I do want to make distributions to a company from the trust, my preference is to set up and utilize Bucket or other companies for those distributions. I prefer to have a trustee that is left as a clean entity that acts purely in the role of trustee and doesn't receive dividends and doesn't hold any other assets other than what's required in their role as trustee. Have you got any thoughts on that as well, Grant?
Yeah, look, I think again, it's the typical one is that when we set up those trustee companies, the goal that everyone sort of talks about is, oh, look, we'll buy it and we'll just get an ordinary company because we might use it again as a trading company, which really detracts from the purpose of what it's there for. It's there as a special purpose trustee company. That's its whole role. And, certainly the one that we've built up, and I'll talk about the leading member one a little bit later on, why it's different, is its only role. And again, you don't need dividends. Unfortunately, you can't get the lower ASIC fee, unfortunately, but it's just that sole purpose, which is also useful because at the end of the day, that company is not going to be worth anything at any point in time, and you're not going to put cash in and out. So it's quite useful. With that one, Mick, actually, it's always come to me is that obviously it's never going to be paying dividends. There's no cash going in and out, apart obviously from the initial subscription for the shares, which I always say, just do 10 shares or 100 shares or whatever. You do ABN, TFN and lodge a return? Obviously,
no, you don't. The trustee company is not required to lodge a return. Doesn't need an ABN. The underlying trust, which is the operating vehicle or the investment vehicle, has the ABN and TFN and lodges the return.
Fantastic.
It's quite an interesting point you mentioned too in relation to capitalisation. I do see from various businesses I'm involved in, I still see a large, well, I shouldn't say large. I see a small population of people who like to capitalise SMSF trustee companies and trustee companies, and
what's the point?
It makes little or no sense to me. If it's a control reason, then you'd be looking at using the leading member solution, obviously.
Exactly.
But there's no point in capitalising, especially potential risk that's involved if you're looking at pre-liquidation or liquidation, and you have unpaid shares, and all of a sudden you have to stump up cash, which there's no need to or requirement to have stumped up if you wouldn't have overcapitalised it.
Yeah, it just doesn't make sense.
No, and that's probably one of the things. Like I put up the great Albert Einstein, and Sandy's doing the same thing over and over again, expecting different results. I mean, it's important that these are observations that I'm going through now, and some of my thoughts on it and beliefs on it, and I'm bouncing them off Grant, obviously, but we like to share ideas to continually improve. But these are some of the things that I've seen come through, even with Lightyear Docs company orders, and I've seen external to that as well. One of
the main areas there for us, obviously, is that innovation wheel that we have is, and we start off with a blank slate. So, what is the best setup for a discretionary trustee company? And then we go down the track, and then, from our experiences, we've all seen where, like a discretionary trustee company, we're involved in one recently where a client had died. Those shares were obviously held by the deceased. They went to the executor. Probate was granted, but then there was a family provisions claim. And the litigator for one of the litigants in relation to the family provisions claim scared the hell out of the executor. And that's another segue, is to make sure when you get an executor, they've actually got to have a backbone, because then the executor wouldn't make any decisions around that trustee company. So they held the shares, but they wouldn't even appoint a director because they were being threatened with legal suit that if they appointed a director. So that then meant that whole investment trust, it wasn't a trading trust, it would have been 10 times worse, which held properties, wasn't even paying its interest bills. And the bank came to foreclose. And of course, the litigant had virtually their foot on the neck of the executor and in control of the family trust. And so that way, normally a family trust would be outside of the family provisions claim, but through this mechanism, it was actually brought into the family provisions claim simply because a very, very poor choice had been made in relation to that trustee company. So again, there is no such thing as a standard company. There's companies for different purposes, like there are bikes for different purposes. So we need to make sure that we choose and also innovate. So if there are problems, our goal at obviously Lightyear Docs is to come up with solutions. And we're continually innovating in that regard. So it's important that we get that feedback loop to make things better and better.
And we're quite fortunate in that aspect to how flexible and we are in terms of our development and ability to change documents, Grant, which we've talked about before. I quite often get Lightyear members who they'll say we want a particular share class that is outside of ours, and because of particular reasons that they need to define in that share class, and we can still deliver that same day, same hour. That they've ordered the company, because we can update the documents and get those changes fed through. Obviously, if the same sort of share class changes are coming through, then we update the documents for everyone else. But we can also customize everything on the fly quite easily, which is fantastic.
Yeah, we've seen our new system too, which will be primarily, we're still working on that, primarily for strategists and licensees, which will be available in coming up in April, and we'll be going and doing a roadshow around Australia in March, so you'll get to see it. But that makes it even easier still, and particularly with the APIs. And they're working on. I know our team are working on a situation where you'll be able to send out a data capture to a client around any issue, for example, successor director, blah blah blah, and then when the client completes it, or the protector, it just comes back in and completes the documents, and virtually you've done virtually nothing. The client's done all the work for you, which is also important because that gets you over that hurdle that everyone is concerned about. Am I doing legal work here? With that instance, if you're just doing a data capture transposition, in this instance you're not even doing that, then there's no problems around that legal service stuff. And you're never ever going to have a problem around companies, because effectively the Companies is a Corporations Act, and really setting up a company is not a legal service. You're simply, it's the original one, the exclusion to the legal service, where you're taking data from the client, name of the director, shares, blah, 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 inserting it in to effectively ASIC, really, at the end of the day, because all the systems just link with ASIC. And that's not a provision of a legal service. And I think that's been around for, forever and a day, which is pretty important.
Yeah, this is another area that I have seen a few times in relation to our, not often, but I've seen a few times, and it's probably something to discuss with administration staff who might be lodging companies on behalf of, or even looking at yourself, is that make sure it's whether you want a joint shareholder or a non-joint shareholder. In this case, where I've got the screen, this would come through as joint shareholding holders owning 200 shares. I've seen this a few times with companies that have been audited, whereas it should be, in fact, if you wanted to have non-joint shareholders, only myself would be ticked with only 100 shares, and then you would add another share location, clicking this bottom box, adding Michael Jordan. Michael Jordan's a reference to my own initials, and my hockey playing number was 23, which was his playing number as well. I put it on my golf ball, so hence
Yeah, well,
the names
definitely
up there.
I think you're probably as good as Michael Jordan playing hockey. But
yeah, not a golf or just basketball. He's better at both.
He's pretty good at the old golf, and certainly likes to have a bit of a wager on some of his shots.
Yeah, I saw his new golf course. It's just opened, or one of his golf courses. They're now doing drone deliveries of drinks and food on course. So
it's not bad having a card around, but it's a lot of idea. One of the ones there is I'm always flummoxed, I suppose, anyway, by why we would have joint anyway. You'll see later on when I go down the track. I think there should just be a one shareholder only, particularly if you're doing a leading member. But joint just
I agree.
But I think you have a look at, particularly for me, who's been through a couple of marriages, you've been, steady ship. But given the fact that so many marriages fall over, the fact you got joint, you're stuffed, because you can't do anything. If you're up against a family lawyer, you're going to be stuffed, unless you're obviously the appointor. You can get rid of that corporate trustee, but you'd have to, because if it's joint shareholders, it's completely useless. Whereas if it's just a sole shareholder, it's so much easier. Or as you've put in there, if you're doing not joint, but you're doing as two shareholders there, that's a better solution than joint. Just doesn't make sense.
Yeah, I agree, Grant. I mean, I personally don't utilise joint shareholders, and I would err on the advice to clients not to use joint shareholders. So I agree with you in that perspective. Obviously, sometimes there's partnerships and everything, but there's no reason why they couldn't hold the shares separately. So ultimate holding companies, I do see this a little bit as well, where we've got one company holding 100 shares in another company when they come through as setups, but they're not utilising or notifying ASIC that the head company of that group or of those two companies is an ultimate holding company. So it's important that you consider whether or not that is the case. Obviously, I've put MJ23 here again. So as you go through the interview, there is a question at the start that says, will it have an ultimate holding company? So if you're setting up a company above another one that holds 100% of the shares, I would be suggesting that you do consider that it is an ultimate holding company as the head company. And the definition from ASIC is that this is my blurb on the definition of ASIC, is that it's a company that has control over other companies. These companies are known as subs or subsidiaries, who will hold most or all of the shares in the subsidiary. So if it's holding 100%, then it's holding all the shares. It is the company at the top of the chain of the ownership, and effectively it's directing that company. So it has to be an ultimate holding company. I do see a large amount that come through where a company is holding 100% in an underlying company, and they don't notify that it is actually acting as or has an ultimate holding company above. So something to look out and consider.
You want to, while we're there, I mean, just so people get a good understanding of the sort of stuff that we do with Lightyear Group, obviously we've got a couple of different companies under there, and we went down the process of having a holding company. You just want to go through the rationale for the accountants out there as to when and why you would use a holding company.
Yeah, for Lightyear Group, the ultimate holding company is Lightyear Group, and it has two subsidiaries that are 100% owned by Lightyear Group, which is I Love SMSF and Lightyear Docs, 2Y Ltd, which is the document provider. ILS has been traditionally our CPD provider. We do use, we utilise, in our case, ILS is effectively our treasury and payroll company, and our expenditure runs through it, and then our main business runs through Lightyear Docs. The reason we have, and then the head company, its pure role is as the runs and manages both of those underlying entities, has a board, sits at those entities that those two companies report into, and it has issued all of the capital to external shareholders and director-related entities. So, and that's the way I have that structured. It's sort of traditionally the way I've run where I have had group entities. That group company does just has the issued capital. It does, I guess, that fundraising activity and manages and runs those entities. And for our purpose, and when you do have groups like that, it also allows, in which we have, where we're set up for consolidated reporting and tax consolidation. So we only have to file one tax return. So we don't have to file a tax return for ILS or Lightyear Docs. We file a consolidated activity statement with the ATO for GST, and we have tax sharing arrangements, which we can assist with putting those in place for you as well if you have clients.
I think it's also important in that for all the people out there to understand, whatever level you are, is that the corporate advisory skills embedded within the Lightyear Group are really second to none. I mean, I was talking with someone the other day, and we're talking about obviously stapled units and shares. Just the experience that I've done and you've done in the past is that really that is something that you won't get anywhere else, but it's all part of your subscription, so that there's nothing that we really are not challenged by, and certainly can find a way out of it. So if you're doing a capital raise or a succession plan, have a chat with Michael. What's the best way to set it up, and consolidated accounts, etc. So essentially, that's what we're there for, which opens up another level of high revenue earning for you going down the track.
100%. I mean, we're that's one of our big differentiators and disruptors in the marketplace, Grant. And we're not salespeople sitting up here trying to sell or flog off the products. We actually, I've got an accounting legal degree. You're a lawyer. You've got a legal background. You've got an accounting background as well. Not an accounting degree, but you've spent so much time in the industry and across many other entities as well. And we've both got so much experience that we can bring and knowledge to our members. It's fantastic. Another point there, I just said share classes. Just consider when you're setting up. I do see. I mean, what I'm saying there is consider the entity you're setting up. What's the purpose of the entity, the requirements now, and the requirements going forward. Sometimes just a simple share class is all that's required. I see people trying to be a bit tricky in relation to different types of share classes, when at the end of the day, it's really just a family business with maybe the dad or the mum being, hopefully only one of them, being director of that entity, and maybe they might have grand goals of becoming a listed company and everything, but sometimes they may need a reality check, and sometimes there's just no need to overcomplicate share classes when you're looking at setting it up. So this is sometimes a question we get. I want a copy of the Form 201. Just so everyone knows, ASIC Edge participants, which we're one of, who provide and set up companies using an API into ASIC, do not create or lodge a Form 201. A Form 201 is utilised as either a paper or electronic form when you're not an Edge participant. Other document providers, sometimes, not all of them, do provide in their package a Form 201. It's simply a dummy Form 201. If you actually have a look at the top of the 201 that's provided by any of those others, there's actually lists shown, because they have to show that this is a dummy Form 201. This is not actually lodged with ASIC, and this is not a 201. So when people are saying, why don't you have the 201? That is the reason. So we send the information through based on the interview provided once it's submitted, and that information then gets sent as a package and through an API that has a handshake with ASIC and creates that company in the ACN, sends us the ACN back. So just some ASIC updates that are coming. As part of the 2020 budget digital business plan, the government announced that they were bringing a modernising business register program. And effectively that all means is that there's currently 31 registers across ASIC and the ABR, and they're going to bring them all together into a new digital registry system, which will be companies, business names, ABNs, etc. As part of that, there is a new DIN program as well, which is called the Director Identification Number. And one of the main drivers behind this is to try and mitigate illegal Phoenix activities, which is where you have a new company is created and continues the exact same business of one that was deliberately put into liquidation to avoid paying, I guess, creditors and predators, as I like to call them. So DIN is going to, we've seen in the past where one director's been able to go from one liquidated company to the next, and people obviously creditors get annoyed and everything. So through DIN, each individual have a DIN, effectively, I guess, like a TFN, almost like the Australian number that no one ever wanted to happen. You probably remember that. Yeah. Australian card, it was called. But I think we well and truly have the Australia card that no one ever wanted to have.
Well, they've got already. Well, it's virtually your MyGov now, your website, because it ties everything in anyway. So
exactly, and they know. I mean, all of our accountants obviously out there will know that when you go into your tax agent portal or you use, say, Zero Tax, all the information feeds through. They have so much information about everyone now in terms of interest on bank accounts, shares traded, even properties come up saying, have you sold a property? Because records indicate through RP data and other sources that you may have sold that property during the year. So they're learning more and more about us each and every year.
Scary, I know.
It is. Before I let Grant jump in, this is just that's coming soon to Lightyear Docs. One of our partners, I Love Accounting, which is a partner of the group, will be providing an outsourced solution for corporate secretarial services. So this is great for your smaller advisory firms, sole practitioners, or even anyone who wants to outsource their solution, their admin. So it will be using CAS 360, secure vaults, and communication channels, e-signing, and others. And as I've doubled up, they're great for smaller advisory firms. So some of these services Grant was touching on before in relation to our background and experience. We've got, I've got a large, and Grant has as well, in corporate governance and listing and IPO, but some of the services will be able to provide being the registered agent. If you do not want to be, we're able to attend to the asset returns and lodgements, act as registered office, act as public officer as well, potentially maintaining statutory registers, directors' interest registries, drafting member resolutions, doing share issues for you, annual solvency resolutions, and everything else that a corporate secretarial service will provide. That will be at a very good price to market, and we'll provide more details in the coming months in relation to that.
Sweet.
Do you want to I'll just stop my share and let you share again?
Yeah, do you want to, okay, perfect. Fantastic.
I'll jump into the chat.
Okay, let me have a look. So these are all the ones that we went through, and I've got, okay, so with the trading companies, we sort of talked about it before, and I think that that's fairly instructive in that we have a look. You might have a single director company that obviously has to go as a secretary as well. You could have multiple shareholders. All seems very easy, but you know what happens on death, divorce, creditor petitions that may end up leading to bankruptcy, incapacity, or a director going missing, which has happened. I know it's in a couple of our guys have had that specific instance. So if you've got a standard company, obviously the trading company is going to suffer. And I can give you numerous instances of people whose businesses virtually their spouse has been thrown into the deep end. And within 2 or 3 years, that business effectively has just been run into the ground, and through no fault of their own. It's just that they don't know what they don't know, and they try to keep it afoot, pay fees. And before you know it, the whole thing is just, falling to pieces, which is why we've got that successor director solution. It's important, all our companies now. So it was changed 2 weeks ago. So if you're running a prior company that you've had of ours, you can simply go and upgrade the company inside the system. You can either get the standard. Every one of our companies has now got the successor director solution, and I'll show you that in a second. So rather than have an alternative director, successor director is a true director on the board. Effectively, if I'm a director, I want to resign for some reason, whether it's bankruptcy, divorce, etc. Then once I do that, then the successor director takes over. So that needs to be embedded in the company constitution, and there needs to be binding resolutions which are forward-looking in terms of when the successor director is to take over. So they come in and they're full-fledged board member, compared to alternative director, which is it just simply replaces me for some short period of time. So it's very easy to upgrade. Now with the successor director, we've now got a standalone. You would have seen that last week. Absolutely imperative to get the successor director solution out to all your clients. I know Tim is charging $350 for it per company, which again, that's an upgrade of the company constitution, which is worthwhile itself, plus a successor director. I think $350 is on the cheap end, because I certainly know a couple of legal firms around charging from $1,200 to $1,800 per company. Now you can do it either directly, or you can do it if you're doing an EPOA. You'll see there's a box in there that enables you to set up a successor director solution, which would mean that your enduring power of attorney is your successor director. So it's a nice little way of doing it. But then again, your EPOA may not be the person who you want as your successor director. So you've got to think of the worst case scenario and look at your own businesses, your own trading companies, your bucket companies as well, your trustee companies, is that if you need to get out, who's actually going to be that next in the line of succession, which is, to me, is that forward thinking, that 3 or 4D chess game about, well, if this happens, who's going to be the best person going in there to look after interests? And that's crucial. And it's not only just, for example, trustee companies, but in a unit trust. If I had a syndicated unit trust with Michael and myself and a couple other parties, and I was a director there, and I'm in there, and I've got a reasonable sort of participation in there, you want to make sure that I've got someone in there who's looking after my interest. And I think that's absolutely crucial. So we need to put that in place. Michael's talked about some of the traps and pitfalls. So the successor director is at the top of the list. Again, I'll jump through that one. From the trustee companies, we have a look there. We've got everything from a unit trust, discretionary trust, SMSF, bear trust, a trustee declaration or nominee trust. For example, when your client goes and buys a property and they want to do a declaration of trust because they don't know what entity to put it in. SMSF Death Benefits Trust, which is a testamentary trust that's created, believe it or not, by the trustee of the SMSF rather than the estate. So, and of course, testamentary trusts, all of those ones need their own special purpose corporate trustees. Michael looked at that in terms of the SMSFs being non-dividend paying, and also obviously just being the individual corporate trustee. And it's better to, again, have that focus that this is all they're essentially doing. So again, what happens on death, divorce, creditor petitions? So in that instance, we would do exactly the same thing with the successor director. So that issue that I talked about before, that with the testator or the main trustee dying, the shares, etc., it would have been a different scenario. Although the shares you might have been able to put a successor director in, but again, the shares would have been caught up in the whole process. So I'm going to have a look at that a little bit later. I'm going to look at that next slide around the leading member. So we've got even a more advanced solution there. So successor director is a good solution, but it still doesn't impact the underlying shares. So with our family protection trust, our leading member trusts, our leading member corporate trustees, I'll just put that little lovely picture down there. This is essentially the way it works, and this is the way we've built it. First off is, if you have a look, you have your standard discretionary trust, you might have your standard company, but I think we've talked about that. There's just so much can happen to that. And it sits over the SMSF discretionary trust, holding trust, and family protection trust. So the first one is I'd be upgrading to leading member trust, and also upgrading the corporate trustee to a leading member trustee company. By putting it into the leading member trust, then obviously we have what we call our leading member appointor. If it's a family protection trust, then it's the family protection appointor. in essence, they're the same sets of rules, just different nomenclature. So it depends on which one you're comfortable with. I'd choose one and then run with one only. Or alternatively, you can just say, look, for ordinary discretionary trust, we'll use leading member, but when we come around to using the protector, effectively what we'll use is a family protection trust, because that's a standalone vehicle, which really we don't want much to go through. So with the leading member trust, obviously we have the leading member appointer, and again, we need to put a succession plan in place. Who's the second or the successor leading member appointer, and who's the second successor leading member appointer? So that's crucial to have that, because the mechanism that works is that we're on the leading member appointer, and you can see up here on the right, they're the principal beneficiary. So the leading member appointer is the principal beneficiary. Now, then the only people who, and you'll see when you're building this or you're upgrading it, one of the first questions you're asked is, do you also want to include the spouse? So the spouse won't be the leading member appointer. Again, you want to have control, so you just want to have one person, but you can bring the spouse in as an additional beneficiary. And the reason we do that is that it is only the bloodline of the leading member appointer who can be a beneficiary, or anyone who is actually associated with that, any entities associated with one of the beneficiaries. So the spouse is actually almost like a default beneficiary, because they're obviously not bloodline of the leading member appointer. Of course, you can have joint leading member appointers, but look, it seems to me as it's probably not worthwhile. If you want, you can always go leading member, dad, successor, mum, or vice versa. It doesn't make any difference. Now, when we go into that, so we've got our appointer there, and notice how I'm not even talking about the trustee or the beneficiaries, because it's all locked in stone. The more we do that, the more control we have. We're building a moat around our clients' discretionary trusts or their leading member trusts. So when we have that, you'll see in the Constitution in there that the chairman, automatically the leading member appointer is a director. Secondly, they are the chairman, plus they then have complete veto power over any director's decisions. The only change is if you're using a leading member trustee of an SMSF, again, they have veto power over everything except the investment decision, where you're running what we call a segregated investment strategy or a member-directed investment strategy for one of the members of the fund. So they have complete veto power of director's decision, and is also the sole shareholder, which I'll look at. In fact, for many of these leading member trustees, if it's just a family company, it's best just honestly run with a single director and also single shareholder. The same with the SMSF, and I did an article just recently in the Self-Managed Super Fund Advisor magazine, is honestly it's better off to have members of the fund but just run with only one or two directors. So, for example, if we've got multi-generations, we might have John and Sally, son Max, and daughter Jody. In that instance, we may just have Max and also John as the directors of the corporate trustee. Max will be the sole shareholder because he'll be classified as the leading member of the SMSF. Max is in there, he's the successor leading member of the SMSF. But Jody and also Sally, even though they're members, they do not need to be directors. And the way they do that is when you go through your EPOA, you tick that box that effectively enables the John to act on behalf of Sally and also Jody or Max, or whichever one you've got there. So again, just be careful with an SMSF. Don't make all members directors. It just doesn't make sense.
It's an interesting point, Grant, because I see it all the time. And there seems to be a belief out there that you have to, if you're a member, you have to be a director if there's a trustee company in place, but that's not the case at all.
Yeah, I know, it's crazy. I had to do a bit of a note to a pretty large dealer group about why, it's against the intention of the legislation that that a person is a member is not a director. And I said, well, no, it's not the case, because there's a specific exception. And so then I went to, there's a commissioner's quite an extensive ruling on EPOAs and SMSFs. In fact, it goes for about 10 pages. One of the examples that the commissioner looked at in there was quite interesting, that he had two members of the fund. It was only a two-member fund. They were going overseas for a permanent, they didn't know how long they were going to be away. So obviously the danger there was that the fund might be construed as a foreign superannuation fund or a non-Australian super fund and taxed at the highest marginal tax rate. So the issue there is that their accountant held their enduring power of attorney for their super fund only. And I think that's important. You can use our enduring powers of attorney solely for superannuation and replacement trustees if you want. And in that instance, the commissioner said in that example that the fund was still a self-managed superannuation fund, even though none of the members were directors, and the only director was a person who was not a member, and that was the accountant. So again, we need to recalibrate our thinking, particularly as we go down to this 6-member and our clients are getting older. They're probably when they get of feeble mind, it just doesn't make sense. They can still be members, particularly if they're taking pensions. You've set up some great asset protection, some great estate planning with SMSF Death Benefits Trust. You don't want to get rid of them, but essentially just have someone else take over that control. So importantly from that one, where the leading member appointor for the discretionary trust or the leading member in the SMSF dies, has incapacity, loses mental capacity so they can no longer be a director, they resigns for any reason, can't be found, divorce, bankruptcy, then what happens is embedded within our constitution, and for each one of these circumstances, that those leading members' shares are cancelled and then new shares are issued to the new LMA. So in the John Smith case, if he passes away or loses capacity or simply says, look, I don't want to do this anymore, then his shares are cancelled and automatically control over that trustee company goes down to Max, who's the son and the second successor or the successor leading member. And that's a better way of switching control. Successor director is fantastic, but if you've got a leading member, it does it all for you anyway. And also countenances that issue that we don't have that problem that the shares end up with the executor, because anything that ends up with the executor on death is potentially going to be used as a tool to enforce negotiation, put your family wealth at distraction. And the case that I talked about with that family trust, where the executor was browbeaten by a litigant, took 2.5 to 3 years to settle, and more than $500,000 to $600,000 in legal fees. And they almost lost the property because the executor wouldn't make the decision to actually pay the underlying P&I payments. So that's essentially where we are with that trustee company solution. So you can use your base standard companies. You'll find we've got special purpose corporate trustees for the SMSF, which has that. Remember, the executor is automatically appointed as a replacement director and is the only one who can pay out benefits. The same if it's incapacitated and there's a living will, exactly the same scenario. The leading member takes it to the next level, has all those sort of things built in, but again, it also has all those, that succession, that moat, that building around it. So if you don't know which one to use or when to use it, I know definitely there's a lot of people, there's a couple of our advisors who are going out and doing wholesale revamps of leading member trusts and leading member SMSFs, which you can actually do through the Moat and Castle really quickly, which is easy to do, and then charging $2,500, $3,000 for that, which is pretty important. So that's a great way to build everything, build bloodline, leading member succession, and also control. So we talked about the corporate secretarial. A couple of things that we want to just sort of follow up. We weren't going to have another webinar, but again, with the New South Wales discretionary trust issue, which is obviously going to bite a lot of accountants on the backside next year, it's going to be an absolute nightmare. I am doing a session with Michael on Tuesday at 12:30, and you'll get an invite for that. So if you've got any clients or any accountants who've got clients with discretionary trusts, they've got property in them, then you must get in touch with them and say, look, you need to upgrade your trust. And I'll go through the process of upgrading and show you and where to lodge those actual new upgrades. So it's a very easy process. So we'll go through from where to go, but we'll also talk about if you've got bulk and you've got some of those ones. For example, I dealt with one that was a 1975 supposed discretionary trust and been lodging as a discretionary trust, never been upgraded, so I don't know how it worked for Bamford. But when I went into the actual constituent document, it wasn't even a discretionary trust, it was a death duties trust. So it was an absolute nightmare. But again, we can upgrade all of those in bulk. And Michael and I are there for that service as well. So that's sort of where we are. So watch out for that one. That'll probably be our last one for this year. Just to give you an idea, at Lightyear Docs, we don't stop. So we'll be working the whole way through. Obviously, skeleton staff, our support. But if you've got our numbers or we've got our emails there, so we'll be working the whole way through. So if you've got any issues, and particularly, I know definitely up here on the Sunshine Coast, that there's going to be a lot of property sales over that break as the Melburnians come in and start to buy up everything. It's crazy. It's turning into little Mexico up here at the moment. So that, we'll be there to, help with the LRBAs, help with any of the leasing or anything along that. So you'll be around too, Michael, won't you? Or
Will be, yeah.
Okay. So again, we're committed. We're also writing a book on succession, asset protection, and estate planning strategies, mainly not for advisors, but mainly for mums and dads, going into just a little bit more about what really needs to happen here. We see this as a great new stretch. And of course, we've got companies, and as you've seen, not all companies are the same. And I think that that's absolutely crucial that we take on board and really have a really good look for that. So I've got here, I believe farm property, which is exempt from land tax, is not a problem. Yeah, if you've got exemptions, depending on the state, obviously, if you've got exemptions in there from land tax, then it's obviously not going to be an issue. It's when you don't have those exemptions that you are going to be in a bit of strife. So really, this sort of stuff happens. We're in Queensland because of COVID. They've deferred the land tax issue until 30 June. But you need to have I believe, I'll go back in, I'll have a look for next week's session. You'll need to have your new deeds upgraded by 31st of March. And I'll go and have a look at Victoria as well. I think South Australia and West Australia are a bit more relaxed. But next week, we'll go through the whole process, the surcharge, the land tax, exactly what's needed inside those trusts and how to lodge. But until then, enjoy your weekend and keep stuff coming. Any ideas, particularly around our corporate guru, Michael, will help you there. He's given you his details up there. So it's michael@lightyeardocs.com.au 0417 770 044. And if you've got any capital issues or capital raising issues, make sure you have a chat with Michael as well. Oh, and liquidation, definitely go to those guys. They do absolute magic in their area as well. Okay. Yeah, that's right. Of course, farmland now might not always be farmland. In fact, that's a pretty good point on that one. In fact, generally they don't. They're all piling off on it now. Anyway, it's Grant Abbott and Michael Jeffries signing off. Thanks a lot for your great words there, Michael, and your great advice.
Thanks, Grant.
Okay.
Thanks,
Bye.
everyone. Bye.